Hello traders and welcome to another video analysis. Today is Tuesday the 10th of November 2020. We are going to take a look at the Forex calendar to see what are the key events for today, and of course then we will make some technical analysis. So let's just slide a little bit lower, and there you go. We are on Tuesday. We got some important data that were published already, like CPI data from China, as you can see, 3:30 in the night, and this data was way lower than expected. As you can see, the actual reading was 0.5%, while the forecast was 0.8, and the previous reading was 1.7. So there is absolutely no inflationary pressures on the China, which means they will not likely hike the rates, cut the rates, soon enough. What are the other important events? We got climate count change from the United Kingdom. The data was already published 9 o'clock according to the time in England, and this data are simply disappointing because the actual reading was minus 25.8 thousand, while the forecast was plus 20,000.3, and the last month it was 28,000. So right now the climate count change is way worse than expected, and the climate count rate, so the unemployment rate, is increasing from 4.5% to 4.8%, which is not very good sign for the British economy. Average earning index, as you can see, is slightly better than the expected. As you can see, for in a 3 months. 3 months average is 1.3%. The expected figure was 1%, and for the last quarter it was 0%. So it's not that bad at all. So at least the wages are a little bit better than expected in the England. And we are waiting for the data from the Germany and the Eurozone, ZEW economic sentiment. The economic sentiment and the current situation assessment will be published at 12 o'clock a.m. Those data has a medium impact on the market, as you can see here, and we are not looking for any improvement. We are looking for the deterioration in the sentiment, mostly due to the pandemic situation in the whole world, and of course in the Eurozone. However, yesterday news regarding a possible vaccine for the COVID-19 made by Pfizer Industries is very, very promising, and the market, as you can probably see on the chart, they rallied significantly higher in the wake of the news. So this data, please remember, they are the old data. They are already collected, and they were counted and recalculated before yesterday announcement regarding the COVID-19 vaccine. Anyway, what do we have in USA? What do we have during the New York session? We got the speeches, basically, two speeches from FOMC member Robert Kaplan and then FOMC member Randall Quarles. So nothing kind of important for today from the United States. I think the highlight of the day was the data from the China and the economic sentiment data from Germany and from the Eurozone that are scheduled for release at 12 a.m. So I think we should take a look on the American indices today, because they made some kind of interesting moves, and I think we should take a look at this markets today. Let me just put some SPX. There you go, SP500 index. So what is going on? Look at this. Our idea of a triangle is now invalidated. But look at this candle. This is simply, I'm just laughing because it's very rare to see something like this on a chart, which is so clear regarding the next possible direction of the markets and the sentiment that is apparently right now on the SP 500 market. We have almost a gravestone doji, which is very bearish candlestick pattern on a daily time frame. Very important. Made this candlestick was made after this rally, and I think, of course, it's just a post hoc interpretation that if Pfizer wouldn't have published the data regarding the COVID-19 vaccine, we would have our triangle scenario still valid. So we would see this candle somewhere here, because that's the sentiment on the market. Anyway, well, bad timing, basically. Anyway, we got this nice bearish candle saying that the sentiment has switched from the bullish to the bearish. This is very important candle. Where's the top? Where's the top? Top is 3,674, which will be right now very important technical resistance. We already closed below the old technical resistance at 3,589, and we close at the lows because it's the gravestone doji. So right now we got a slight gap to cover between this highs here and yesterday's open. So we will cover this gap, and I think that we should pay attention right now. Let me just put some lines on the screen. One line will be the high of the from the 12th of the October, and the second line will be, of course, this line, the high from the 19th of the October. So any breakout below basically 3,529 means that the market is back into this pattern here, which is no longer a triangle. So this is not a triangle anymore. But we will, for now, we will just leave these lines here on the screen. We will just leave them, but we will treat them as a trend lines, simple trend lines, not a triangle lines. So what should happen right now is that the market should continue to move down, it should test the technical supports, yeah, this zone, and then break lower. So that's the S&P 500. Let's see if the Dow Jones made some interesting moves as well. Dow Jones doesn't have any kind of a interesting candle. However, this upper shadow tells a lot about the current situation on the market, which is apparently again switching from bullish to bearish. The high was made at the level of 30,055. So let's just put some coordinates a little bit more precisely. There you go, 30,055. That's the exact high. And as you can see, we closed like in the middle of this candle, so that's not a good close for the bulls. But still, hey, the candle is green, right? So, well, the bulls are still in control of the market, but here comes the bearish pressure. So the levels, I guess, above 30,000 points on the Dow Jones Industrial Average are being used to close the long positions and to realize some short-term gains to get the money off the table and maybe to open the short positions because of this long upper shadows. So for today, I think we should break below 28,959, and we see if we can get below this blue line again, right? Because this might be some kind of a fake upward rally going on right now on the Dow Jones Industrial Average. So please pay attention to this. And of course, NASDAQ, what we should do without what that would be analysis without the NASDAQ. I think I got it on the other chart because I've made this analysis. Well, as you can see, it doesn't actually it doesn't actually work as we want it, because our let's say triangle strategy, triangle scenario basically didn't work again because of this fake out. As you can see, big red candle, bearish engulfing into the new highs, not very good at all for the bulls. So let's see what are the important levels. There you go, this is the level, first one, and let's just mark the yesterday high, and it's somewhere around here. So this is the zone right now between 12,258 12,471. This is a very important weekly supply zone for all of the market participants. Bearish engulfing pattern, little bit, you know, out of the triangle. So right now we can do this right now, but it's not a textbook triangle right now, but we are back into the triangle territory. The question is whether we are going to make the wave E, right? If this wave will be made just right above the wave C, right? So that will be, let's say, roughly around 11,000 points. Because if it is made if this is the preferred level, that means we will go way lower on the NASDAQ in the coming days, because we will go from 11,860, let's say, that's the yesterday close, 11,860 exactly, to 11,000. That's 860 points to the downside to be made. So that's kind of a nice level as well. And okay, let's just make this yesterday highs as our temporary technical resistance as well. So switch in the momentum, switch in the sentiment after hitting the level of 60. Not quite big enough, because we are still above the level of 50. 50 is the neutral level on the RSI indicator. So after we break below 11,578, which is the local technical support, we should be below 50 points level at the RSI. So right now the outlook on the NASDAQ is negative as well, right? It's negative as well. So please pay attention to the current developments. And of course, let's just take a look at gold. Good old gold. Massive move on gold yesterday as the result of the vaccine news, because the market participants, as you can see, made this bearish engulfing and the bearish harami kind of a pattern on the daily time frame chart. So this massive move, it's like a $100. Yes, more than $100, because the high is 1,965, low is 1,850. So that's $1,015 from top to bottom on this candle. That's a massive move for gold. As you can see, we still didn't break below the key short-term technical support, which is 1,848. Right? We just barely touch it. Today we are slightly, of course, we have a counter reaction, so we are slightly bouncing towards the nearest technical resistance, 1,883 and 1,892. It should hold the bullish pressure, and then some kind of a bearish response should take place after the price will hit this zone between these two levels, and we should follow lower. Of course, any violation of 1,848 will open the road towards 38% of the Fibonacci retracement of the whole move up, the big swing up. With this level is located at 1,835. Of course, if we break even below this level, well, that might be kind of an interesting sentiment shift for the next weeks, maybe even to the end of the November or even longer. So right now, very important move yesterday on a gold, made basically on the news from a pharmaceutical company Pfizer, and right now we are just waiting whether this was just one-off event, or this $115 move will be the beginning of a deeper correction towards Fibonacci retracements and below. The 50%, as you can see, is at 1,762. So that might be the next target if 38% is violated. So I guess that's everything from me for today. Please keep an eye on the markets, because this week will be very, very important and might be crucial for the next weeks to come, because we might have some important sentiment shifts on the financial markets. So that's everything from me for today. Thank you very much for watching, and I hope I see you guys tomorrow on my next technical analysis video. Take care, guys, and bye-bye.